Welcome to Exchange Rates UK TV. It is the 21st of September 2021. Taking a look at stellar lumens here on the weekly chart. So if you go all the way back to the end of June, beginning of July, we talked about how supportive it was for stellar to see price hugging the candlesticks, but finding support consistently up against the bottom of the cloud here. That has fallen out into badness now. Because we're below the Tenkan-sen and the Kijun-sen and the cloud on the weekly chart. Excuse me. And that's like vinegar makes me cough. And we had the lagging span down below the candlesticks as well. Contributing further to the downside pressure here is the composite index crossing below both of its moving averages, the RSI failing to find support at 50, now moving down to test 40. That's the last oversold level in a bull market. And then you have the percent B flirting with the idea of moving down lower to test point 2. So weekly wise, there is some near-term support on the RSI, but really only if you get some confirmation from the composite index as well. It's shifting over to the daily chart. I mean, it's pretty bearish here as well. If the lagging span closes below the cloud, then that fulfills all the criteria we would need for an ideal bearish Ichimoku breakout. And that is when the current close is below the Tenkan-sen and the Kijun-sen and the cloud. And then you have the Tenkan-sen below the Kijun-sen. Future span A is below B, which it is. And then you have the lagging span below the candlesticks and below the cloud. So the final condition for that to occur is the lagging span closing below the cloud. And so that means it would need to close below, it would need to close around 0.2615 or so. If that occurs, very, very, very bearish outlook. Now, looking at the fib extension tool, expansion, the 100% extension of this move is down at the 10-cent level. That is a fairly substantial drop, especially when you measure it from our prior highs. We're talking about an 86% drop. Now, at the same time, that is something where you go, oh my God, that is awful. It's really not outside the realm of normal, especially when you consider, we were trading at that kind of a level once before, and we traveled down that far. But I mean, really, ultimately, we kind of exceeded it. We almost, we went down 97% at one point until we had that nice rally through 2020 and into 2021. But yeah, if you want this to go higher, the retracement has to be deeper. It needs to bring in more people, more interest, and it needs to shake out the weak hands and let the long-term buyers return. There's a couple zones that, you could definitely see act as support above that current zone. I want to add the 2020 volume point of control on here, or volume profile, to get the 2020 volume point of control, because that's going to be important to look at. So down below, we have the 14.5-cent range. That's where the 886 retracement and the 786 expansion are at. And there's really not a lot of confirmatory high volume nodes in there. So, really, it might have to come down to that 10.5-cent range. That's where the top of the 2020 volume profile is at. That might be a possibility. We'll see. But otherwise, it still looks bearish in the short term. But if it can get back above the point of control on 2021, that's basically doubling in price is what it would need to do. Shortly under doubling in order for it to go higher. But yeah, continue to see it show weakness and continue south. That does it for me on Stellar. Thank you for watching. Please don't forget to like, comment, and subscribe.